Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It's 5 o'clock on Thursday, and it looks as if Nvidia got hammered today. There was a ruling that they can't export a lot of their chips to China, so it just took the stock down tremendously. Also, Bed Bath and Beyond is tanking as well. So it's not a very good scene out there. Also, Bitcoin is off. I think there's a general market sell-off overall. I'm going to show you a stock that I'm looking to short in hopefully in a few minutes here once we get once we get rolling here on the slides. So let's before too long. By the way, if you're watching on TikTok, super easy to see all the slides and everything. All you have to do is go to the link up there, click on it, and you will see the link for the YouTube, youtube.com/Dallas Trading Floor, all one word. So that's kind of how it plays out. All right, here is the overview on the market today. Interestingly enough, the Dow was up just slightly. I mean, very, very slightly, 0.06. So very not very much there. The S&P was down, and the thing that really got slammed, of course, was the was the Nasdaq. Oh boy, I tell you, it's a tough one to trade. I think we're gonna see the market retreat, and I'm gonna start moving from my long positions into my shorts, and hopefully that'll work out. Unfortunately, it's just a tough market to trade. I want to show you the bulls versus the bears, and this is sort of a indication of what the stock writers are saying, the journalists that cover the stock market. Um, and we had seen we had seen the bulls inching up, but now they're headed down, and the bears are inching up. So it does kind of look like that. The signal is it's going to be a very very tough. It's going to be a very very tough September, and so we want to get ready. We probably want to get mostly in cash right now, and then get ready to possibly do some shorting, and hopefully I'll be able to cover this, sort of how to do it, what I'm doing in some videos I'm going to try to make and upload to YouTube so that you can kind of see what I'm doing and see if it's successful or not. Currently, I'm short only using bear put spreads, but that's about it. Bed Bath and Beyond. Just wanted to show you the chart with Bed Bath and Beyond, Nvidia, and they're both doing pretty horrible all the way around. It just not looking good. This is the let's go to BBBY, BBBY, and of course, just a terrible chart. They're going to be laying off about 20% of their they're going to be closing 20% of their stores and laying off quite a few of their employees. Currently, the stock is at $8.75, so not really very good. I definitely think you should avoid this one. I don't even think this is a good short, as there's not a lot of meat left on the bone. So not something that you probably want to do. Let's kind of look at the checklist. Pretty horrible checklist. It's basically 33% failing on all areas, and of course, it's down significantly. So, not something you probably want to be too involved in right now. So, I'd probably steer clear of that one. Here's currently what I have in my long positions. Not very much. Petrobras PBR. That's not the. It's not the beer, but the stock, but the oil company that was actually up today. So let's take a look at the live chart on PBR. This one's sort of bucking the trend. Um, it's the Brazilian national oil company pays an extremely high dividend. As you can see, it came down. It tested that 21-day exponential, pulled up above that, and it's looking fairly good. So let's go ahead and switch the camera for everybody looking on TikTok, so you can definitely kind of see what I'm talking about here. This is a symbol PBR, Petrobras, and what's happened is we have that relative strength line moving up. It's currently at 98, which puts it in the top 2% of all stocks out there. What happened is we came down to this green line. That's the 21-day exponential. I trade off of this line, and we definitely got some support here. We're starting to move up above that 10-day line. So we're still in an upward trend on PBR. Hard to believe in this kind of market. It still has a 98 relative strength, so that's looking very, very good for considering everything in this market. We're about 17% above the pivot, which is at $12.38. So this one I'm still in. I would not recommend buying it here as it is extended. The place to have bought it is kind of where I did, I believe, and that was on this little handle here as it was below $12.36. And that's kind of where I got in. We moved above that pivot and then we've continued to move higher. So that's kind of that's kind of the place that you probably want to you probably don't want to get into at this time because it is extended. Unfortunately, I wish it was not, but it is. So take a look at BJ's. This is BJ Wholesales. This has been bucking the trend in retail. I don't quite know why, but it just seems to have. I mean, it pulled back a little bit today, but it's still buyable and it's still in the buy zone. And I guess it's just because people are downshifting into less expensive retailers, and BJ's definitely is in that category. The pivot on this one is $71, and we're right above that right now. We're in the buy zone, which is basically the pivot. 5% up, that's your buy zone. The reason you want to buy in that buy zone, if you possibly can, is that if you buy above that, it's extended and it tends to pull back. So, not necessarily what you want. This is actionable right now, even though it did pull back today. 96 relative strength. So, this is the top 4% of all stocks currently trading. So, not a bad thing. It's got a 100% checklist. I want to put that up there for everyone so that you can see that. It's got a 100% checklist, and it is not in the oil and gas. So, let's see. The last third one is Comstock Resources. Of course, this is a gas producer. This is an oil and gas um, CRK. I did increase my position size in this one, but as you know, I'm primarily in cash, basically waiting for the market to kind of change direction, and then I'll be shorting. I'm afraid it's going to go down here a little bit, but it definitely what happened with Comstock is I did buy a little bit too high at 21.41, but it was it was still wasn't at the peak. We pulled back down. We bounced off the 21-day line, and now after hours we're currently at 19.49. It's pulling up about 3%. So I do think that we're going to see some strong movement in this one. Why? Because of course gas is in short supply in Europe, and Comstock has a lot of has a lot of gas that they can supply. So that's a good thing. All right. Well, thank you, everybody. Let's take one last look. I want to show you the stock that I am looking to short, and what I'm going to do here is let's go first to kind of the small portfolio. Not exactly very exciting here. Of course, this is the demonstration portfolio that I show everyone. 75 over 75% in cash. We're up on PBR, but we're down a little bit on Comstock. Just very, very light exposure overall. Here's what I want to show you on the stock that I am going to be shorting, and of course that is Lennar. Now I'm not going to short it until it comes up to that 21-day. It comes up to the 21-day line. The 21-day line being basically right here, and let's kind of take a look. And for everybody on TikTok, let's show you kind of what I'm doing with the live chart here. So the 21-day line, where if it comes up to this, I will shell. Currently is at 82.07. Basically, if it comes up to 82, that is where I'll sell it. And by the way shorting works is that you borrow the shares, and I happen to use TD Ameritrade for this, and then you sell the shares, and then hopefully, if it goes down, you then close the short by buying the shares back. And you do have to have a level 3 account to do that, and we're probably going to go into that a little bit more in the future. But I have a short order for one half position of Lennar at 31.90. So if it comes up to that, basically, which is basically the 21-day exponential moving average, then I will short it there. So we'll see. We'll see if I get a fill on that. I'm not sure that it's going to happen, but you know, we can always hope. All right, so let's get to some of the questions here. Thank you, everybody, for tuning in, and let's see if We're gonna look, at PP. There's nothing good out there. Yeah, it's pretty true. I agree with you, Jake. Jake 5 star. I like that handle that you got there. I kind of agree with you. It's just a incredibly tough market to trade. We're kind of neither here nor there, but I do think we're going to start taking a move down. And I want to show you the S&P because I think that really is telling the tale. I think you got to stay out of the Nasdaq if you're going long right now, just because it's just too volatile. I've tried it several times and gotten rejected at the hoop, as they say. So not a good thing. But I want to show you this chart because this kind of tells the tale for for the S&P 500. We came all the way up here, moving very nicely, and then boy, we got to that 200-day moving average, and it just is like it's sort of like just a wall there, and then we just bounce right off of that. Boom, we're moving down, and I do think we're going to probably be moving down. And I'm drawing the line here. I think we're going to move down, below 3,800, probably to 3,600 at least. So that's where I see it going in the next month or two. So not necessarily the greatest thing there. Again, we came up to that 200-day moving average. This is the S&P 500 index. We bounced off of that straight down, and then I think that where we're going based on this reversal line here, we're going to go all the way down. We're probably going to go below 3,800. So this is why I'm getting ready. I'm kind of getting ready to short things, and it's what I'm probably going to be doing. So I'm probably not going to be using puts to do this. I'm probably just going to be borrowing the shares, and we'll see. So we'll see how that we'll see how that works. Do you think the retest of the lows on the S&P? Yes, I do. I think we will. And do you think? Yeah, I think we will. I think we will. I think we're going to go down to at least 3,600. Yeah, I do believe that. I do believe that. I think that's a good point. All right, so let's get into the questions. Thank you so much, Charles. Thank you. Good afternoon to you. I'm glad you're watching. Please tell your friends because we need more. We always need more viewers here. All right, let's look at XOM, and of course, this is the Spider Select for energy. And I'm sorry, this is the not, this is Exxon Mobil. Excuse me. I want to show this against the XOM, which is of course is the energy ETF. So let's look at XOM. Of course, this is Exxon Mobil. Not the largest oil company in the world. I think Saudi Aramco is bigger, but definitely significant. This is, of course, originally was a Standard Oil company. So very interesting, based in Irving, Texas. All right, so let's take a look at XLE. That is the Energy Select Spider. Now, here's the thing about the XLE. The XLE tracks the XOM. Why? Because it's made up of the XOM and CV and Chevron. But if you look at the overall energy sector, Exxon is actually outproduced out. It's Exxon is actually doing better than the overall energy sector, just barely, but definitely better than that. So really, oil is still holding up. I think that if you've got the right entry points, I think it's still the thing to be in. And I definitely have been in oil pretty solidly because I do think it's going to go higher, even with even though it's been moving higher for quite a while. Just looking at some of the other ones that I've been in, this is Range Resources RRC. I got knocked out of this one. We were in the buy zone, and then it reversed. But what I want to look at here is I kind of want to look at the U.S. E&Ps and kind of see what is the best, at least for right now. Comstock is sort of at the top of the list. This is the one I do own. So let's take a look at Comstock and see. Yeah, I do think this one is starting to form a handle, a cup with a handle. It doesn't really show on my screen here because sometimes the pattern rec is a little bit off, but this is a cup, and then there was handling. I don't know. We're going to draw the reversal line in there. What I do think is that right now it bounced off that 21-day line. I think this one's going higher and definitely has after hours. This is one I think that, even in this downward trending market, is one that you might want to look into. Comstock Resources, uh, CRK, and this is basically top in the U.S. Explorers Group. So kind of an interesting one. I think a good one to take a look at uh, for potential buys. Now I'm in it right now, so I'm a little bit biased on that, but I am in it. I do think you can still buy it. Um, even in this market, I think it's probably going to go higher. Let's thank you, Charles. Gold is down. What do you think is heading, and where does this mean to the market? Very good question there. Um, everybody says, everybody out there says, well, gold is the thing to own during inflation. I happen to disagree with that. Interestingly enough, in periods of high inflation and the thing to own, and this is just really weird, I believe is cash. Cash or commodities. That's about it. Why? An oil. Why? Because you can't eat gold. That's the problem. And what's gonna happen as the inflation increases, more and more businesses are going to be in trouble. There's going to be more and more scrambling. So actually, in a downward trend, you actually want to hold a lot of cash. It's a strange thing, but actually this year, cash has been one of the number one assets out there, which is just incredibly strange, but it is true. So let's kind of show that out here. So I'm going to look at the cash ETF, and I'm going to look at the gold ETF. So what I'm going to do here, let's see. These are the four. Let's see. I got to get this up here on thing. Okay. GSY. Yeah, that's the one I want. GSY. And so basically, what's going on here? So if we can get it back over there. Yeah, there we go. So what's going on here is if we look at the GSY, which is basically cash, this is sort of overnight money, GSY, and we look at gold, which is tracked with the gold ETF. See if we can get that in there. See if it'll let us do there. Ultra short. Okay, so this is the GSY. Let me show that to everybody on TikTok here. There we go. Okay, so this is the GSY. So this is basically a proxy for cash. And as you can see, it's basically lost about 2% of its value since the beginning of the year. So basically this is cash. And let's look at gold. GLD, this is a ETF that tracks the price of gold. And you'll notice, and this is really interesting here, I want to show it to everybody out there. This is really, really interesting. Hopefully, unfortunately, this created yellow, which is not easy to see. But you'll notice that since the beginning of the year, cash has outproduced gold in terms of its performance. Interestingly enough, but if we throw in energy, let's throw in energy, XLE, you'll see that energy has well has done far better, and this is the XLE, this is the Spider Select Energy. This is essentially cash where it says GSY and then gold. So actually the least productive asset class basically in this last year, if you're looking to hold on to stuff, has been gold. Believe it or not. The GSY basically it's basically lost about 2%, which is about inflation overall. But even though the inflation rate is running at probably 11, 12, 13%, the actual value of cash, and this is calculated in a lot of ways, is actually down just slightly, about 2% year over year. But if you'll notice that the XLE, which is the commodity that everybody needs, that's oil. Now, a lot of people don't want to believe that. They want to believe that, we can do everything with windmills and ferries, but the oil is truly still the world still runs on oil. So that has done very, very well, as you can see. So kind of going into kind of a lot of detail there, but gold is down. Why? Because the price is being manipulated, and unfortunately, we can't deal with that manipulation. That's really central banks that are manipulating that price. The reason, of course, they want to keep it up. They want to keep that price up because for many banks, they have to keep the price of gold higher. So it's it's kind of a strange deal all the way around. Okay, Death Vice. I like that handle. Hey Jim, just graduated. Oh, UTD in finance. About to start a really good job at DFW. Okay, well, I'm over here. By the way, I my office is over at on Greenville Avenue, right near SMU. So if you're interested, just send me a if you send me an email. I don't have anything right now, but I'd definitely like to talk. All right, so Mr. Franklin, the end of the day rally was weird. Absolutely. Well, everything's weird right now. That's because I think we're getting ready to reverse lower. And I don't like the fact that we are, but it is what it is. You just can't think. Okay, let's take a question from TikTok. I shorted Amazon. Not a bad idea, Jake 5 star. Not a bad idea. Let's look at the Amazon to see kind of let's take a look. AMZN. Let's take a look to see kind of if we've got some shorting. Kind of analyze the what how I would possibly look at the short. AMZN. And interestingly enough, I think that's not a bad idea to short something that was a potential past leader and now is kind of changing direction. So let's look at that short. All right. Typically, what I like to do when it's shorting, you see, is let's first of all let's determine. And I'm going to remove this reversal line. Yeah, I'm going to remove that reversal line there. All right. What happened, of course, it came all the way down to the bottom of the consolidation. This is about 101. It's the bottom of that consolidation. And then it rallied up to the 200-day moving average and peaking out at about 146.57. So it peaked out there and then it's pulled back. Now, typically when you short, the best thing is to short as it's coming up to as it's coming up to an index. And I believe if you were going to short this one, I'm not, and I actually did, but if I were going to short this one, I would look to see if it will move up to this 21-day moving average, and that's where I would short. Now, what is a short? Well, a short is basically when you borrow the shares and then you sell them, and then you wait until the shares go down. Hopefully, they go down and when they go down, typically 10%, that's where you're going to close the short. And the way you close the short is you buy them back at a lower price. And of course, the difference is your profit, hopefully, in that case. So where I would probably short Amazon would be at about 132.77, which is the 21-day exponential moving average. And then why would I do it there? Well, part of the reason I would do it there is because at the 21-day line, that's sort of where many of the programmatic traders, the algorithmic traders, are going to be doing what I'm talking about. So it's pulled down to the 50-day line. That's this red line here. It's bounced on that 50-day line. I suspect it's going to come back up to that 21-day line, and then that's where I would short it. Why? Because that's probably where it's going to meet the resistance. If you'll notice, the 10-day line, that's this little pink line, is moving downward, and it's right basically where the 21-day line is. So that's where I would short it for Amazon. But I think that's interesting that you are shorting it. Remember, here's the thing: when you're shorting, try to make sure that you control your position size. Don't go hog wild and bet the farm. Try to try to short possibly one half position, or possibly as much as a full position. Now, a full position is 12.5% typically of your portfolio value, and you want to do that because you don't. If it goes against you, and the thing about shorts is that they can go against you very, very quickly. You want to protect your downside. So also what you want to do is you want to put in, if you get a fill on the short, you want to put in to cover 5% above where you shorted. So that's just saying that. All right, I'm going to do the reverse of what you're doing. Okay, Well, good. I hope go long and maybe you'll prosper. I'm totally okay. Tesla. All right. Well, if you want to do exactly what I'm not doing, buy Tesla long because it may go up and it may do very very well. But let's take a look at Tesla really quickly. Currently, it is making a move. It kind of bounced a little bit off of the 50-day moving average, but I do think that overall Tesla probably will rally up to about the 21-day line and then move lower. So that's my guess. So if you're looking to kind of mirror trade what I'm doing, that might be a good thing. I'm currently not in Tesla, but if you want to do it that way. All right, let's take another question. Um, okay. Yeah, it was very, very weird. I agree with you. All right, Charles, let's see what we've got. Any public lumber companies? Very interesting. Good question. Um, West Fraser Timber is a good one. And let me see if I can't remember the let me see the symbol on this one. West. What I'm doing is I'm just looking at because I should remember that WFG. There we go. WFG. So that one might be something that we could look at. So let's look at WFG and see what's going on there. All right. Well, it is moved below that 50-day line. Now, part of the reason I am very very bearish right now on the timber industry is because housing starts have fallen away. They've just fallen down totally. We have thousands of houses currently that are under construction in the United States that have not been finished, and it's really going to be difficult to finish these. Why? Because of the supply chain problems. So I do believe that we're going to see some pressure on the timber companies. I just don't think there's going to be as many housing starts because the interest rates are going up. We have a lot of unfinished um, uh, houses, and I do think that we're going to see a drop in the lumber price. They peaked during COVID, and the reason that they peaked, of course, was because there were so many housing starts. It was still very low interest rates. There was not a lot of place for the capital to go, and it went into new homes. Now, that's not going to be the case as much. So, I do think we're going to see some pain when it comes to the timber companies. But let's kind of look at this timber and wood products area. It's one of the worst performing areas currently, but I want to kind of look at it, see kind of what the top companies are. Well, Boise Cascade, of course. Boise Cascade is largely owned by the Koch brothers. You probably didn't know this, but it's largely owned by them. And we do have some of these other ones, West Fraser Timber and UFP. This is the plywood company. So let's compare West Fraser Timber with Boise Cascade and see kind of in this space if there are any opportunities. And I don't think there are, but let's just take a look. This is let's let's take this is the Building and Woods project overall, and then let's put in West Fraser. Let's put in BCC, which is Boise Cascade. There we go, and then let's put in um, West Fraser Timber, WFT. I think it's WFT. Is that right? Have it right here. West Fraser Timber, WFG. Excuse me, got that wrong. It's like WFG. So looking at the timber industry overall, it's kind of bunched up. The whole industry in general is up about 5% for the year. Not a tremendous amount, but definitely up there. West Fraser definitely doing better at 115, and Boise Cascade's doing the better of best of all. But basically, we've been in a downward trend on the timber companies since June. So I would not recommend being in any of these timber companies right now. I just wouldn't, as the home building is slowing, and that's going to be a big driver for this. That's going to be a very, very big driver. So I would not be in any of the timber companies. The best of the two, I think, is BCC, Boise Cascade, and then West Fraser Timber. I think those are the two best, but I think they're both in a decline, and they've been up this year. But I think that the demand for timber is moving lower. Why? Well, unfortunately, homes they just aren't building as many homes right now, as there's so many of these homes that are not finished. All right, let's look at the semiconductor area of the market. And let's see if I can remember what is the best for semis. Let's see. All right, let's look at the. See if I can get the Philadelphia Semiconductor Index. In fact, let's do it. Let's just do it the easy way by going over here and going 0. Excuse me. And let's take a look if we can see the semiconductor index. And I think it's P. Oh, puts and calls ratio. Da, 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 da. Okay, it's the volatility. Um, well, heck. There we go. The Philadelphia Semiconductor Index. Let's look at that. All right. So this is the Philadelphia Semiconductor Index here, and what this is this is the overall for the semiconductor index, and it is not looking good, folks. Unfortunately, we have been moving down. We hit our peak on the semiconductor index back here in December, and it's been a slide ever since. Now, I was thinking that we would see some recovery in the semis, but no, it has not been the case. I was thinking that we had this little rally. I was thinking it was going to go up, but no, it lost strength and it's losing more strength. So definitely not the way, not the good look. So let's look at the index, the Philadelphia Semiconductor Index. Of course, this is the index of the semiconductors, and it's been going down. And let's compare it with Nvidia, which has been also going down, but it's going down faster. And then I want to compare it with one that I was in that I had to bail on, and that was on semiconductor. So the reason I was in on, as you can see, it was way outperforming the Philadelphia Semiconductor Index. But even on semi, it's not doing all that well. Just a bad market overall in general. But Nvidia definitely underperforming the index. You don't want to buy it. And with onsemi, it's outperforming, but it's pulling back a little bit. So if you want to be in any of the semis right now, the best semis probably are on semiconductor and monolithic power. Those are probably the two best. So yeah, sorry about that. I just think you got to stay out of the semis, and it stinks. But I think you have to stay out of the semis. I think you got to stay out of the semis for right now. All right. Can we short timber? I would not short timber. I would not short timber. There's a lot of reasons why not to. I think it's better to short the home builders rather than the timber because shorting commodities are really tough to trade. I'll be honest. Maybe it's because I'm not really as seasoned a commodities trader as I am an equities trader. I'll be honest with you there. But I think it's better. There's a lot more. The reason I'm interested in possibly shorting the home builders is because there's a lot more meat on the bone in these home builders. So I mean, let's take a look at Lennar. The reason I talk about Lennar is because the luxury home builder, and it's been one of the leaders. But I think right now, the residential builders are 181 out of 197. So they're really at the bottom of the market. And I don't foresee them doing better. I don't foresee them doing better. So I think we're going to see some more pain there. That's the reason I'm looking possibly at doing the short on. Now I haven't done it. I haven't gotten the fill on this one yet. So I have the short out there, but I haven't gotten the fill on it, so it's not real yet. I wish well, I don't know, I wish it, but it's only until I get a fill on it is it really, is it really there? So basically, the order I have is at 181 90, and basically what I'll do is if it pulls up to there 181.90, that's basically this green line here. This is the 21-day exponential moving average. If it pulls up right here, then that's where I'll short. And why? Because if you look at this, if you draw a line basically from 89.31, which is kind of um, where it you can see. Oops, let's get that in there. There we go. There we go. Okay. So if you see that, you see how that line, what I think is going to happen here is that we're going to get a rally up to about this line. And that's the 21-day exponential moving average. That's where I think it's going to get resistance and it's going to pull lower from there. So that's why I want to short it. I don't want to short it at where it is now. I want to wait until it rallies. I want to wait until it rallies in order to do that. So that's kind of my game plan. We'll see if that works or not. Let's look at the TBT. The TBT is an ETF that will go up if interest rates on longer term bonds are going up. So it's a 2x ETF, and the way it works is it will move higher. It will move higher based on the expected interest rates on the 10-year treasury. So that's one of the things you got to look at. It's the no, I'm sorry, the 20-year treasury, excuse me. It's it it's an ETF that corresponds to twice the inverse performance of the Barclays 20 plus year US Treasury index. So as US Treasury, as you know from your finance courses in college, if as interest rates go up, the value of bonds goes down. So if the interest rates are going up, this will move with that. And as you can see, it went up today. Why? Because everybody knows that we're probably going to see some higher interest rates. And if we do, of course, that will make the TBT move up. You'll notice the relative strength on this one, 97, and that basically means it's in the top 3% currently. And also, you'll notice that the volume is starting to spike on this one. We're starting to see some volume come in from some of the big boys here, and it's moving up, and this is moving up. So this is possibly a good one to be in. So I'm not in it currently, but it's looking. Unfortunately, this one's looking good. Why I don't say unfortunately, well, because when this one does well, the rest of the market not so much. So this is a view from 20,000 feet on the weekly chart. Let's look at the monthly chart, and as you can see, it's been basically for pretty much it's been in the downward trend for forever. Why? Because since 2008, when this thing was started, our interest rates have been going lower and lower and lower. Now they're starting to pick up again, and that's going to create a spike here, and that's sort of the deal with the TBT. So long term, it's probably a good. It's probably good. All right, let's take the last question. Thank you very much, Charles. So appreciate it. Looks at Grin. Grin is that one, or I'm just grinning. All right. Ah, this is interesting. I don't know this company at all. It's just a shipping holdings company. It's in the transportation sector. And the question is, what is it doing? Singapore-based company operates a fleet of dry bulk carriers. Okay, well, so we're in shipping. This is actually an area that's doing well, of course, because of the situation with commodities. So very good. And it definitely has moved above that 200-day line. It's got a 93 relative strength, $23 stock, so not a very expensive stock at all. I want to kind of look to see, and you're not going to be able to see this on TikTok, unfortunately. I want to take a look at the well, actually, we can move it over here so you can actually see it. Let's just kind of move over the camera. I don't know if you can see this or not. Let me just pull everything aside so that we can get closer, closer, closer. There we go. All right, and then you can take a look at this really quickly for this one. The sales have been moving up very nicely, as you can see. was up 47% last quarter, and we had a huge increase in profit, 177. Now, let's look at the price to earnings ratio. This is an incredibly low 3. I can't believe that. That's an extremely low price to earnings. That means that if you buy the shares for $21, you're gonna end up, yeah, look at that. Cash flow is $10.91 a share. The price of the share is $23.29. So this is, they're printing money basically. Wow, that's really interesting. I want to see if there was a dividend. Okay, yes, there was. How interesting. We're gonna move over there to see. All right. So here we go. We're back over here, and we're going to look to see kind of what the dividends on this one has been. This is really a good one, Charles. I wasn't, this didn't come across my radar, but I definitely like it. I mean, look at these earnings per share. It's terrific. And we've got the dividend there. Wow, this is basically a stock dividend. They give you basically 5 shares for every 100 that you had. That's interesting. The question is, when is the next dividend? It's on the 11th. I mean, the next earnings is due out in November, November 17th. Very interesting company. Very, very interesting. I don't know much about it at all. Singapore-based fleet of dry bulk carriers, which normally don't do all that great in the market, but they are doing great now. So very, very good. Very interesting stock there. Thank you for that very much. I'm going to kind of put that down. All right, let's see. How are long-term thoughts on Lululemon? I've shorted lemon a few times. I think it's going lower because I just don't know how many of those $300 yoga pants that they can sell. Though I definitely like looking at them. I have to admit that they definitely look good. Um, would I short this one? I would possibly think about it. I would possibly think about it. Why? Because typically the best shorts are on stocks that have been winners before, and then they're kind of seeing a little bit tougher times. Look at this one. It was all the way up here at 480. I don't think this is a Peloton, but might be something that is shortable. 480, it come up there, and then you see this is the it just tested the 200-day moving average. Now I wouldn't short it here. I would wait till it came up to probably right about here to short it. So where would I short this one? Well, I would probably look to short this. Let's see if we can get it in there. Let's look at the technicals. I would look at 311.42. So I'd look at about 310 is where I would possibly short this thing. And why? Well, let's take a look. This is the head here, and this is the left. This is the right shoulder, and the left shoulder is basically right about here. So what I think has happened is uh, it's come down. It's rallied into this head, and then it's come down again. There's another shoulder here, and theoretically, this shoulder should be lower, a little bit lower than the head. You might actually really say that this is the head here. It happened way back in November, and then it's been moving down ever since. So down like that. So I think it's time probably for this to move lower. But you're right. I think Lulu might be Jay. I think it might be a short. I'm going to evaluate this a little bit more. I definitely like the fact that it's got so much juice on so much meat on the bone. 321.60, and the fact that it's moved up about 9%. That's telling me that it is trying to hold on and that it could be a good short candidate, but not now. All right. Well, thank you very much, everybody. I'll be back tomorrow at 5 o'clock, and hopefully we'll have some more good things to talk about then. If you're not a member of the Action Trader, it's very easy to just go to www.dallastradingfloor.com, first and last name and an email address, and we'll get you all set up on the Action Trade Alerts. I'm going to try to emphasize shorting a little bit more because I think we're going into a phase of the market in which that might make more sense than going long. But we'll see. We'll see how that goes. So please, also, if you're new here, please like us Please like us because you know we need that. We need also that that you subscribe. That would be also great too. But hit that like button, smash that like button, and subscribe to Dallas Trading Floor. I'll be back tomorrow again at 5. Happy trading, everybody, and thanks for watching. Thanks for taking time out of your day to watch.